Hello and welcome to chapter 13 of the Accounting Insight tutorial series. In this chapter, we are going to be dealing with the profit and loss account. That is basically a statement that computes the income and deducts the expenses of a business in order to determine the profit or loss that a business is making. Now that we've come to the end of the period of accounting for our sample company, we can now produce the profit and loss account for this company from the trial balance that we prepared in the previous chapter. So in the worksheets, we've got a blank profit and loss account that you can fill out. And I'm going to do that now using Excel. I've opened two windows of Excel. The first window has the final extended trial balance that we did in the previous chapter, and I'm going to show you how to complete the profit and loss account for this company. So the first thing we're going to do is put in the sales. So that is 23,000. So I'm using Excel, so I just link it to the cell that I need, which is there. The next thing is we're going to look at the cost of goods sold. So the first thing will be the opening stock. In this company, it just started trading in the year 3000. It didn't have any opening stock, so that is 0. And then it purchased goods, so we know the purchases were 13,000. Put that in there. We now need to deduct the closing stock because they were not sold, and we're trying to compute the cost of goods sold. So we put a minus. Closing stock there is 1,500. And there you can see the cost of the goods we sold is 11,500. And in here I've got a formula that deducts 11,500 from the sales value made, and that gives us the gross profit of our trading for the year. So this company made a gross profit of 11,500. We then continue to other operating expenses and we fill those in. So the first one is salary. It was 1,000. There it is. The next one was the employer's national insurance paid. It was £120. There it is. And the company paid rent, which was there, £800. And the next one was phone. We got our phone bill there, plus our accruals, £94. And we got motor expenses, which are there, 578. And we had motor tax, which was there, £75. Stationery, printing and stationery, there it is, £29. Insurance, we're going to take our adjusted value there, 187.50. So it's rounding up to the nearest pound here. And bank charges. Yeah, bank charges. We got bank charges there, £10.50. And then we had the depreciation of the van. So you remember from our previous chapter, depreciation being allocation of the cost of the van over the period of which the business is benefiting from that van. So we calculated it here. Depreciation charge £750. So I'll just link that in. £750. Okay, so our total operating expenses, when you add all these up, it comes to 3,644, and you deduct that from your gross profit and you'll get an operating profit of 7,856. And the next thing we need to put in is interest received. So this interest is being earned just because money is sitting in the bank with the bank. So it's nothing to do with our trading exactly, or our business. just happens to be extra profits. That's why it's shown separately there. So put equals £10 interest. Yeah. Okay, I'm just going to scroll down now. We can see the rest of the profit and loss account. So now we've got profit before tax 7866. Now here is where we calculate the corporation tax, and we've said it's 20% of your profit before tax. So 20% times 788 will give you £1,573. If you remember, that was the journal I talked about in the previous chapter. So this is how it's calculated. So you deduct that from your profit before tax, and you'd get your profit after tax of 6,293. And the final thing to put in is the drawings or dividends that the owner has taken out of the business. In this case, it was where was it? There it is, £900. Deduct that, and you're now left with a retained profit for the year of £5,393. So as you can see, this is your statement of profit for the year. So business has done really well, and yeah, it looks good. It looks good. Obviously, if you had a bad year, you probably show a loss there. So I'm just going to quickly run through the reasons to why businesses produce profit and loss account. One of the reasons is they want to track what parts of the business are making profits. So they might be tracking profit and loss by product or area or country, and they can see where their sales are increasing and their profits are increasing, or where their costs are too high and they need to control those costs. All these summary statements will give the top managers a good idea of what's happening. In this case, you know everything that's going on in this business, so you get a bit less benefit from this, but nevertheless, it helps you have a bird's eye view of what's going on in the business. You can show this profit and loss account to a bank manager or an investor to ask them for more funds so you can generate even more sales next year. And if they see this, they'll be happy that your business generates profit and that they can get paid some interest from the funds they lend you. So it's a good use of a profit and loss account. And you can also compare your performance with other businesses like yours. How much profit do they make? Should you also be investing in their type of business, and so forth. Tax authorities want to know how much your business is making so they can levy their tax on your profits, as you can see here by Journal 5. And government regulations now require businesses of certain sizes to file a profit and loss account for public record. It's also for public interest. And finally, if you finish running your business and you want to sell it on, you want to retire, having your profit and loss accounts for like the last 5 or 10 years will help you get a good price for your business, and also help the buyer kind of agree to a reasonable price. So those are the main reasons for a profit and loss account. I hope you've enjoyed that. The next chapter will deal with the balance sheet. Thank you for your time.